Hey, Steve Saretsky here. Welcome back to the show. This is our usual Saturday video. I'm currently away in Palm Springs. This is kind of an annual holiday trip for myself, but I want to put a video out there as we're now in 2025 and sort of the outlook moving forward. There's a lot of opinions on how it's going to play out. There's a lot of opinions on the Canadian real estate market. This video specifically this week is going to be a deep dive analysis on the Vancouver housing market. Can give you sort of everything that I'm seeing from not only on the ground, but a data perspective, pros, cons. This is going to be a deep dive analysis. So if you don't care about Vancouver real estate, probably not the video for you. If you do and you want to get the deep dive analysis, this is exactly what it's for. Secondly, there's going to be a Calendly link in the description below. If you are looking to buy real estate or sell real estate, you need help with a real estate decision. I'm going to put a 30-minute consultation booking out there. So I open this up occasionally, a couple times every year. So I'm going to open that up to start the year here. If you want to book a 30-minute call with myself because you're looking to buy or sell real estate and you need some help from myself and my team, I'm happy to have that 30-minute discussion. So I'll leave that with you in the description below. Now let's frame up this week's video, which is to say that there's so many opinions out there. I see it on the YouTube comments every single week. Everyone seemingly knows exactly what's going to happen. And I'm going to be honest with you, I don't know what's going to happen. I can look at the data. I can look and see what's happening on the ground, say, okay, this is what I think is going to play out. And so these aren't necessarily forecasts or predictions. These are just kind of what we're seeing today and my best guess estimate. Now, starting it off, if you look at sales, if you look at sales for the year, Greater Vancouver. So you take Greater Vancouver and you take the Fraser Valley board, sales were historically very, very weak. So we had just over 40,000 sales in 2024, barely surpassing 2023, which is some of the lowest sales we've seen. Going back to 2018, you had 39,000 sales. Even in the depths of the global financial crisis, we had about 37,000 sales. So the last couple of years, in terms of sales volume activity levels, have been historically very weak. The 20-year average is just under 50,000. It's about 49,000. So sales were historically weak over the last couple of years. Of course, they were historically abnormal at the height of the pandemic in 2021 when we had 70,000 sales. So obviously a lot of demand was pulled forward in 2021 and early parts of 2022 before eventually falling off a cliff. And when that's going to form the basis of this week's conversation, which is, congrats, if you've been in the real estate industry for the last couple of years, I mean, that's probably what as hard as this is going to get. And I'm not saying that we're out of the woods just yet, but these were historically challenging times for anyone in the industry, seeing sales volumes well below 20-year historical averages at a time. Think about this. Over the last 20 years, how much has the population grown in Greater Vancouver and in the Metro Fraser Valley area? I mean, it's grown significantly, right? We've been importing over 1 million people a year in this country, and a huge chunk of them ending up in the Vancouver Lower Mainland. So to say here and say, 40,000 sales, that's historically very, very weak. Now, what we're seeing is there's these important variations that I think are playing out in real time that it's important to distinguish. We're so used to painting the market with this broad stroke and saying, well, a rising tide lifts all boats, which is to say in these bull markets, it doesn't matter if you own a condo, a townhouse, a detached house, doesn't matter if you own it on a busy street, crappy location. When the market's rising and it's rising by double digits, everything goes up. And so this is where you get into the trap that people get stuck in is they get bad advice, bad realtors, whatever, maybe no realtors, and they just buy the first thing they can get their hands on, right? They've been outbid on 2 or 3 properties. And so in a hot bull market when everything is going up, they just want to get something. And so this is what we saw not only, in several different bull market cycles, but in the last one that started in 2020 and went through the early parts of 2022. And we saw this as well in the pre-construction market, right? Where it's like when prices are rising as fast as they are, people extrapolate recent trends and they end up basically saying, well, I just need to get something. I'm worried about my kids getting priced out. I'm worried about me getting priced out. I don't have the income yet to qualify. So if I can just buy a pre-sale. And so what do we see is we see that a lot of demand gets pulled forward in the pre-construction market, right? It's basically people speculating on ever higher prices. And so what you can see is pre-construction sales were at basically all-time highs in 2021. We had 19,000, just under 20,000 pre-construction condo sales in Greater Vancouver. And so the challenge is that if you bought a pre-construction condo in 2021 and in the early parts of 2022, which is when we had record sales volumes of pre-construction, a lot of that is underwater. You paid 5, 10, 20% above resale prices at the time. And keep in mind, resale prices were quite elevated in 2021, 2022, but you paid a premium because the developers had a hot market. They had the pricing power to do so, and people were extrapolating ever higher prices and not doing their due diligence and buying into these pre-construction units. And so what we're going to see, the issues that are going to manifest and the issues that you keep hearing about in the GTA is that these units are now slowly going to be coming to completion, and people are going to have to close, and the appraisal values are going to come in lower than what you paid. So if you paid, $800,000 for a 1-bedroom condo in Vancouver, it might only appraise at the banks for $750 or $725. And so what's going to happen is you're going to have to come up with a difference to cover that shortfall. And of course, if you start extrapolating and saying, well, if 20% of the building suddenly can't close, you're going to have real issues there. And so I don't think this is a major problem. I think it's a crisis level in the GTA. But again, we're here in Vancouver. There's certainly projects I can think of in downtown Vancouver, the Butterfly, Kangukuma, people that bought near peak levels that are going to lose 7 figures. These are more sort of one-offs, but there is a significant cohort, and that's where the real weakness is in the market. So if we extrapolate further on the pre-construction market, okay, so even if you manage to get the value to appraise, you close on it, are your carrying costs, is the rent going to cover your carrying costs, right? Because think about it, mortgage rates are up. I mean, when you bought, the mortgage rates are probably at 2%. Today, they're at about 4.2, 4.3. And so you've got the carrying costs that now exceed what the rent is. And that we're seeing now is the rental market. The rental market is starting to struggle. The rental market, we're seeing rents down about 8 to 10% over the last 12 months. This is not a seasonal change. This is just weakness in demand. You have excess supply coming to the market, record number of units under construction that are completing. Population growth is pulling back. Household formation is pulling back, right? What happens in a weak labor market, weak economy, is people don't go out and rent a 1-bedroom condo for $2,800. They stay at home with their friends and family, or they get a 2-bedroom condo and they share it with a roommate. People get economically creative. And so what we're seeing is a drop off in household formation, and we're seeing weakness in the labor market. So rents right now are coming down, and we've been told by the federal government that population growth is going to go to zero over the next 2 years. So there's no sort of release valve there that's going to help out these investors. And so you have to say, well, what is the outlook for the investment market, right? I mean, if there's not really any future price growth potential, if rents are declining, and it's not a huge bull case to suggest that they're going to move higher in the near term, what is the bull case? Now, if you look at what's happening in the rental market in BC, we still have a lot of units under construction. In fact, in BC, we have all these purpose-built rental units that are being built, right? So they're designed to be rental buildings. They're not going to be stratified. They are rental buildings that are being built and constructed right now. About 14% of the total stock in BC, in British Columbia, is under construction right now. So think about this, all the rental buildings that are in existence today in British Columbia, we are building at a pace that is, with these units currently under construction, that is equivalent of 14% of the total stock. So there's a lot more rental housing coming on at a time when I just told you rents are down by close to double digits and population growth is going to zero. So if you're a pre-construction buyer or investor that is going to put down a deposit and say, well, yeah, I'm going to close on this in 3 years, and then I'm going to hope that it's going to be a good investment, or it's going to close in 4 years. I'm going to hope it's going to be a good investment. I'm hoping for future rent growth. I'm hoping for future price appreciation. The outlook is pretty bleak. So it's really tough to sell pre-construction units. And so if you look at Greater Vancouver, this year we're just over 7,000 pre-construction units sold in 2024, which is well below your long-term average, and it's well below the 19,000 units we sold in 2021. And in my opinion, in 2025, it's going to be a market that continues to really struggle. And so again, if you think now about these developers that have these projects, maybe they bought land, they've been going through the rezoning process, they're smaller to medium size, and they have to launch new development in this market. Good luck. It's going to be an incredibly difficult year for pre-construction sales. So when we talk about the bear case in Vancouver real estate, the bear case is all of the people that bought pre-construction units that need to close, that are coming up for completion. It's all the prospective investors that normally would buy pre-construction units and the developers that rely on them. That's going to be a tough year in 2025. These are the real problems in the market. Yes, there's some filter through now into the resale market, into the condo market specifically, where you say, well, who is the buyer of these 1-bedroom, 500 square foot units? Yeah, there's certainly some first-time home buyers that are just trying to get their foot in the door. But there's also a lot of investors that would normally buy these units. And it's hard to imagine a scenario where these investors are going to come and fill that void when I've just outlined the outlook for declining rents, record number of units under construction they're going to enter into the rental market, and again, stagnant population growth, which is really one of the bull case arguments for this sort of market supply. So when we look at the condo market, we can see that there's about 6 months. There's about 6 months of inventory right now in the condo market. It's high. That can suggest that we are in a buyer's market, right? Okay, so anything sort of in that 5+ range is a buyer's market. So we're in the 6 range. Certainly been worse before. 2019, we were at 10 months of supply in January of 19. Early days of 2020 during the pandemic, 9. 2012, really soft market, 12 months of supply, and in September 2012. So it's weak. It suggests there's probably still some downwards pressure in the condo market, particularly when we layer on the number of units that are still coming on to the market in that segment. And we think that investor demand is going to remain relatively soft and relatively impaired. Now, flipping forward to sort of more of your bull case. And I'm not saying bull is in like, oh my gosh, you got to run out there and buy it. But when we say, okay, well, like, are there any bright spots in the market? Again, as I started off this video, I said you can't paint the housing market with a broad stroke today. It's a market that it depends on your location, depends on your bedroom, number of bedrooms. It says basically what we're in now is we're in more of this end user product type. So if you have like a entry-level 3-bedroom townhouse, entry-level single-family detached, there's still tons and tons and tons and tons of young families that are trying to enter the market, that need space, that need to upsize. We talk about this missing middle in Vancouver. Well, it's true. There actually is a missing middle. You haven't been building product for these young people that are having kids and needing these 3 and 4-bedroom properties in that sweet spot. In Vancouver, it's basically been like either you jump up to the $2.5 million single family house, or you buy a 2-bedroom condo for, call it $1 million or 1.1 million in the city. And so there really hasn't been that 3-bedroom product type that's been built over the last decade plus. And so you have this huge demand, and we're seeing that obviously now being filled by new duplexes being built in the city, the rise of multiplex and multiplex zoning across the metros. And so that is a significant factor. And so when we now look at single family housing, we've been told that single family houses, due to geographical constraints, are no longer being built. We actually have to densify. We need to take those single family houses. We need to convert them to townhouses, condos, and now multiplexes, which have now been basically legalized, essentially, more or less, across most municipalities as mandated by the BC government. There's still some quirks in there that we can kind of get to, but for the most part, it's the signal. And the signal is we need fewer single family houses and we need to densify. And so these single family houses are going to continue to decline overall on a supply basis over the next 5 to 10 years. And so, if we look at home building for single family housing, Vancouver's single family housing starts are at all-time lows. This is with data going back to the 1990s. We're building fewer and fewer single family houses every single year. And in fact, the number here, which is just over 2,000 single family houses being started on a 12-month basis, I would argue how much of that is just people that have torn down a previously existing single family house that was 60, 70, 80 years old and just building a new single family house for themselves to live in. That's probably where your 2,000 housing starts are. We're not just finding new tracts of land and building single family houses. And it's because the math doesn't work. If I'm in Vancouver, the number that we give clients now is like, well, listen, if you want to build like a very generic single family house in the city, I'm not talking about Surrey and Abbotsford and a buddy and he knows a buddy and they can hire a bunch of illegal trades that are here and pay them cash. We're talking about like you go and hire a general contractor to build you a custom single family house in the city of Vancouver. The number we're kind of using more or less is about $500 a square foot, right? So if you think about it, if you're building even just say a 2,000 square foot house, it's $1 million just for the construction, not including the land. The land's call it another $2 million for the land. Now you're into that brand new house for $3 million. That's not including your financing costs. How long are you going to be financing the land and the construction? Well, it's probably a minimum 18-month build. So that adds another couple $100,000 in financing costs. So you're well north of $3 million for any new single family detached house. And that's why they no longer get built. And that's why you're seeing more and more single families turning into duplexes and triplexes and things of that nature. So the bull case is still there for single family. That's what we're seeing on the ground right now is, there's a bid from builders as well. The land prices are not being pushed up by the builders because they can't make the numbers work, quite simply. But you're still seeing that the builders are oftentimes having to compete with the young family. The young family says, well, I can pay a bit more because this is going to be my home for the next 10 years. Whereas the builder has a set price. They say, if I buy the land at X and I know my construction costs, I know my financing costs, and I know what the market is willing to pay when this project is completed in 18 months, this is what I can pay for the land. And so the developers have a very strict ceiling on what they can pay for the land. These are very small, nimble builders that will build 1, 2, 3, maybe 4 projects a year. And they don't have the capital to just buy land and sit on it for the next 5 years waiting for the market to rise. That's not a good use of capital. So these guys have a strict budget. We're not seeing any real land lift, a very, very, very marginal land lift at best for the new multiplex zoning in Vancouver, because in many cases, it is still more the highest and best use in many cases is still single family. Like if you think about like multiplex and the places on the west side, Dunbar, Point Grey, like there's still people out there that want to own $3.5, $4.5 million houses. Like you're not going to go and pay $3.5 for the dirt to try to build a multiplex that you can sell for these huge numbers. Like the highest and best use in many cases is still single family detached. So again, this is the important context on zoning. We have it all the time with our clients that reach out and say, well, I now fall into this plan and the BC government's upzoning transit oriented. I can then sell. No, in many cases, there's very little to no land lift. And in many cases, strata windups, for example, can take 5, 10, 15 years. Right? The whole transit-oriented density stuff that the BC government has announced is you've actually just unleashed a whole bunch of land that can now be developed. You used to have like sort of a scarcity, right? If you could buy the land and go through the painful process of rezoning it, you've created this like scarcity. You've now increased the value by upzoning. But if you upzone all of the land all at once, you kind of remove a lot of that scarcity. So you're not really seeing any land lift in these TOD transit-oriented density areas. which I think is a very, very important context for the average homeowner, um, that maybe isn't aware of how this all works. And not only that, conversely, if the cities at the same time give you the density but raise the development cost charges, you got to pay less for the land because it's net on the developer's balance sheet. When they're looking at their pro forma, the numbers have to make sense. So that's kind of what we're seeing in the market right now. We've got mortgage rates that are in the low fours. Your variable rate mortgage is, prime minus, call it 1%. So you're at about 4.5% on your variable rate mortgage. Your fixed rates stay at about 4.2, 4.3%, depending on the term. So your fixed rates are still relatively cheaper than your variable. Now, even if the Bank of Canada, let's say, cuts 50 basis points next year, that's kind of the expectations. That brings your variable to about 4%. Really not that much cheaper than your fixed rates. And again, your fixed rates are being priced off the bond market. So if you want to know where fixed rates are going, and if you're coming up for renewal, we know about 25% of mortgages are being renewed next year in 2025 across the country, you have to follow the bond market. The Bank of Canada cut rates 175 basis points this year in 2024. The 5-year bond yield, which is a good proxy for determining 5-year fixed mortgage rates, dropped by about 25 basis points. So it's a huge difference. And when everybody starts quoting, well, the rates are going down, my price should go up. No. It depends on the bond market, because that is what's going to price your fixed rate mortgages. A couple last things before we wrap up. There's been the new BC government flipping tax. Some people have asked me about that. Is that going to change the market? And I just looked at the data. I'm someone that myself has rehabbed properties in the past. Taken previously dilapidated properties, gone through, spent time, energy, construction budget to rehab these properties and then sell them as end user products. If you look at the flipping numbers, you can see that flipping activity in BC is running at all-time lows going back to the 2000s. Okay, so just under 3% of all properties are bought and resold within a 24-month period. How many of those properties are just people that got a divorce, change of jobs, estate sales, life happens, things happen. So there's really no flipping activity. There's no flipping activity because prices aren't going up, for one. When prices are rapidly going up 10% a year, of course, you're going to get people that are going to come in and out of the housing market. That's the nature of markets. That's the nature of these, sort of financial markets that we have. And so there's no flipping activity. So the BC flipping tax is not going to change anything. It's not going to bring any more affordability. It's all politics. If you want to go through the CRA tax code, house flipping, if you have any record or history of flipping properties, it is considered business income. It's not considered capital gains. Okay. It is considered business income. If you have a history of flipping properties, it is business income, which means 100% of the profits are taxed at your marginal tax bracket. They are added to your T4 income and taxed 100% of the gain. So this BC flipping tax has done nothing. It's just all smoke and mirrors, like a lot of government policy is. But that's kind of the future here for Vancouver housing. I think what we're seeing today is I still think the problems are almost exclusively focused in the new construction, pre-construction market, sort of these small investor condo types. I think there's a lot of condo supply that I still worry is coming to market and completing at a time when rents are declining and we have more rental supply in the market. And we've been told that immigration, which is probably one of the sole causes of double-digit price appreciation over the last couple of years, is going to be going to zero. We're going to have a change of government, probably at the federal level, that is also going to take a sort of a more anti-immigration stance. There's no savior there for any of these landlords that are looking for higher rents to bail them out in the near term. We know that housing starts are going to continue to roll over because investors are scarce, and they're going to continue to be scarce because when there's very little prospects of future price growth and future rent growth, you just put your money somewhere else. And so I think that's what's going to happen in 2025. I think that single family still has a lot of good tailwinds for it, to suggest that we're going to continue to see higher density. There's still a lot of people that want single family houses. We still have real land constraints in Greater Vancouver. And we're seeing that. We're seeing that not only in the data, but we're seeing it anecdotally, as I'm seeing the single family markets bounce back pretty good. The best deals were still in the summer to fall of 2022 when sentiment was bad. Think about the market, right? Like, if you're going to go and negotiate a price, if you say, I want to lowball this seller, you do that when sentiment is the worst. When people are like, oh my God, things are going to get worse. Rates are going to keep going up. They're going to go from 2% to 4% to 6% to 8% to 10%. And when everybody is negative and pessimistic and feeling bad, that's when you can go in there and you can lowball, because you have the leverage. When the market starts to shift, in my opinion, as it is now, when rates go from, the Bank of Canada's cut rates 175 basis points, your fixed rates have gone from a high of about 6.2 down to about 4.2 today. You just lose a lot of that leverage in your negotiations, because people go, well, it seems like things are probably going to get better, right? I mean, the peak of high interest rates is kind of more or less behind us. And, in general, things seem to be at least a little bit more optimistic than they were 6, 12, 18 months ago. So I don't think I'm going to drop my pants on the price. So that's kind of what we're seeing. There's still some deals out there. Downtown market's still pretty soft. Obviously, return to office hasn't really transpired. Investors, which are about 50% of the market there, still kind of on the fence. So there's some deals there. Foreclosures, if you look at the overall numbers, still relatively quite low. I think the mortgage renewal cliff was probably more hyped up than it probably should have been. Being that rates again have gone from 6.2 down to about 4.2. And so that's alleviated a lot of the issues. You think about the mortgage renewal cliff, when rates were 6.2 a year ago, people said, well, maybe they go to 7.2, maybe go to 8.2. What does that do for someone that's renewing coming off of 2.2 and renewing at 7.2? That's a much different conversation than going from 2.2 to 4.2. And we'll see where rates, obviously where bond markets take fixed rates in 2025 here. But I think a lot of those concerns have kind of dissipated, along with some wage growth, et cetera, that things are relatively quite stable, which is and again, this is important context, because this is a dramatic difference than the horror stories you hear in the GTA. I think the GTA is a completely different market. We're in a market today that is very regional, very specific. There's been a lot of changes. There's been a lot of volatility, and I expect a lot of volatility. I don't think 2025 is going to be an easy year to navigate. I think it's going to bring forth winners and losers. There's opportunities in any market. So anyways, if that video helped, if it brought you any sort of value, entertainment, like, subscribe. Again, there is a link in the show notes to my calendar where you can book a 30-minute consult if you're looking to buy or sell real estate. If you just have general questions, guys, just feel free to email me or comment it here. Please don't take up a 30-minute time slot and saying you're working with somebody else and you just gotta, you want to pick my brain on a couple ideas. This is for a real consult. Hey, I've got this pre-sale, don't know what to do with it. Or, hey, I've got this portfolio and I want to lighten the load. What do you think I should do? If you need help on the servicing side, we're happy to take that 30-minute consult. And we'll continue to put these videos out again every Saturday. So hope that helped, and see you next week.